Hello and welcome to Earnings Echo. We put together the most important information about Spotify. Today, we're doing a deep dive into the Q4 2025 results. And look, if you just glance at that top-line revenue, you might think, okay, steady quarter. But the real story here is under the hood. Spotify really seems to have flipped a switch on profitability.
They have, completely. It's a very robust report. If you look at the raw revenue, it's 4.53 billion euros. That's up 7% reported, which, landed exactly where they said it would be. But that number is hiding the real growth.
Right, because of the currency issues, the classic constant currency versus reported dilemma.
Exactly. They faced massive foreign exchange headwinds, about 580 basis points. In plain English, the strong euro just ate up nearly 6% of their growth. If exchange rates had stayed flat, their revenue growth would have been a much more aggressive 13%.
Okay, but the market isn't obsessing over revenue today.
No, not at all. They're cheering for the bottom line.
Because they crushed the profit guidance.
They didn't just beat it, they smashed it. They guided for, 620 million euros in operating income. They delivered 701 million. That pushed their operating margin all the way to 15.5%.
Which, for a company that critics always said could never be truly profitable, is a pretty definitive statement.
It is.
So, revenue was hit by currency, but they still squeezed out record profits. Before we get into how they did that, just give me a quick pulse check on the users. Are people still signing up?
Oh, they're still growing. Monthly active users, or MAUs, hit 751 million. That's a beat against their own guidance, adding 38 million net new users in just one quarter.
And the paying ones, the premium subscribers?
Also a beat. They hit 290 million. That's up 9 million. So still very healthy growth.
Okay, so double-digit user growth is still there. Let's go back to that profit number. 701 million. How do you generate that much extra cash if revenue was just, in line?
It all comes down to margin expansion. Their gross margin hit a record high of 33.1%. The premium side is holding steady, keeping its margins around 34.8%, even with heavy spending on video podcasts.
So the hero this quarter was the ad-supported business.
Exactly, which is usually the drag on margins, right? The cost of getting people in the door.
Right.
Well, not anymore. The ad-supported gross margin jumped to 19.5%. That's a massive leap up, more than 400 basis points from last year.
4 full percentage points. So the podcast drag is finally vanishing.
It is. The investments they made in the ad machinery are finally efficient enough to turn a real profit on the free users.
That's a huge pivot point for the business model. Now, I did see a note in the report about social charges helping the numbers. Is this just some kind of accounting trick?
It's not a trick, but it is a variable you have to watch. Social charges are basically payroll taxes tied to the stock price. And because the share price moved in a certain way, they owed about 67 million euros less than they forecast. So yes, that helped the operating income number.
But even without that 67 million tax break, the core margin story holds up.
Absolutely. The fundamental improvement in the ad business is the real sustainable part. And the cash flow proves it. Free cash flow was a record 834 million for the quarter.
Bringing the full year total to almost 3 billion.
2.9 billion for the full year 2025.
That is some serious firepower. So they have the cash. What are they doing with it? The sentiment on the earnings call seemed busy.
Pleased was the word management used. You can tell they've moved past that cut cost to survive phase and are now back to invest for growth. They highlighted the Wrapped campaign, which had over 300 million users engaging.
The largest ever, I think they said?
It was. But they're also rolling out new features. Fast music videos in over 100 markets, audiobooks expanding into the Nordics, a new Spotify partner program.
And I saw something about AI, prompted playlists.
Right, that's in beta now. It lets users steer the algorithm using text prompts. It's a smart way to keep people locked into that premium ecosystem. They also made a point to mention the health of that ecosystem, noting they paid out over $11 billion to the music industry in 2025.
11 billion. That really puts their scale into perspective. So, looking ahead to Q1 2026, does this train keep rolling?
The guidance says yes. They expect revenue to stay pretty flat at 4.5 billion again. Currency is a big headwind there. But they see operating income staying very strong at 660 million, and they expect to close in on 760 million users.
So for you, the listener, trying to make sense of all this, what's the big echo takeaway here?
I think the investment story has just solidified. This isn't just a user growth story anymore. Spotify has proven they can monetize those users at record margins. They're balancing 10% subscriber growth with, high margin profitability. It's a mature, efficient machine now.
Mature, but still dancing. I like it. And finally, the obligatory disclaimer. All content in Earnings Echo is AI-generated information and does not constitute investment advice. Investing involves risks. We assume no liability for your investment decisions. Do your own research before taking action. Numbers checked, portfolio prepped. Catch you again soon.